What's going on, money lovers? Welcome back. So today we're going to be talking about a company called Viatris. If you're not familiar with them, I'm going to give you a quick background. Then we're going to get right into their Q2 earnings report and take a look at their financials. Now, I had already started the position in this company a while back, and I just bought some more shares today after they reported an outstanding quarterly report. So let's get right into it. So Viatris was spun off from Pfizer. So people who owned Pfizer got shares of Viatris back in 2020. So as you can see, it's been going up a little bit the last few days, a little over 3% dividend yield, and they have an extensive pipeline of products here. They treat a broad range of therapeutic areas. So as you can see here from this list, just to name a few: cardiovascular, infectious diseases, oncology, immunology, women's healthcare, respiratory and allergy, and so on and so forth. They have many well-known brands. You'll probably recognize some from the list here. All right, so let's take a look at their second quarter results. They reported a strong second quarter here. So CEO said, we delivered another strong quarter of results. We're executing at a high level across the entire business, and we continue to leverage our scientific and R&D capabilities to pave the way for patients' access to safe, effective, and high-quality medicines. We've raised our financial guidance for the year, and we have strong momentum going into the second half of 2021. The historic approval for the first interchangeable biosimilar in the US we recently received is perhaps one of the most significant milestones to date, demonstrating the success of our scientific capabilities. This quarter continues to highlight our ability to generate substantial cash flow, which was above our expectations, and our strong cash flow performance allowed us to repay $1.15 billion of debt in the first half of the year while also paying our quarterly dividend. We anticipate significant increases in cash flow generation in the coming years, driven by strong underlying business performance, a reduction in one-time costs, and continued improvement in cash flow conversion. So lots of positives there. Good to see that they're paying down the debt, and we're going to look exactly what their ratio of assets to liabilities is later on in the video. So next up, let's look at their presentation. So as you can see, in Q2, they brought in $4.5 billion in revenue, free cash flow of almost $1.3 billion. They raised their fiscal year 2021 guidance. They paid back $1.15 billion in debt, and they remain on track to repay $6.5 billion by 2023. They do have a significant amount of debt. We'll take a look at that when we look at their balance sheet in a minute. So that's definitely something to be aware of, but they appear to be moving in the right direction. So if we look at their results by segment here, you can see that their total net sales were up 5% year over year from around $4.3 billion to $4.5 billion. And their brand segment saw 2% growth. Generic saw 13% growth. It is interesting here, if we look at their sales in developed markets, sales were up pretty significantly in the developed markets, 8% year over year, as well as in emerging markets where net sales were up 16%. Now, as you'll see, when you compare this company with some of the other companies that we've talked about, like BYSI the other day that I was showing you as a potential treatment for cancer that's in phase 3, companies like Mind Medicine that have decent pipelines, but nothing compared to a company like this, a really true healthcare company with a very robust pipeline. And as you can see here, they have so many products here that are reaching approval stage in all different phases right now. And as you can see, global sales here, there's quite a large addressable market here. They have even more in the pipeline under development here, a couple of which are reaching approval stage. So in their complex injectables key pipelines, they have a lot of products that are getting closer and closer to reaching approval, upon which they should become huge revenue drivers. Lots to be excited for. So if we look at their total net sales, $4.5 billion versus a year ago was only $2.6 billion, growth of 69%. In developed markets, they grew 33%. In emerging markets, they grew 112%. And their free cash flow is also up 40%. So as you can see here, they updated their 21 financial guidance. If we just look at the midpoints, revenues increased. They're expecting $200 million more in revenue now, higher adjusted EBITDA by $100 million, and free cash flow has grown by about $150 million. Now, one thing to definitely be careful with this company, as you can see here, if we look at their total assets here, you can see they have total assets of $59 billion versus total liabilities of $37 billion, which at first glance seems fine. But if you look here, of their assets, a lot of that is in these goodwill and intangible assets. So not necessarily, tangible and liquid assets that they'd be able to sell off if they needed to. So their assets to liabilities ratio is definitely something worth keeping an eye on. And they do have $24 billion in long-term debt, but they did pay some of that down this quarter. So hopefully they keep paying it down and heading in the right direction. Alrighty guys, so let me know what you think of Viatris in the comments below, and make sure you stay tuned. Hit that like and subscribe button as well as the notification bell. I'll be covering Lots of big earnings this week. So we've got Unity and Coinbase reporting earnings after market close today, and a lot more exciting earnings coming this week that I plan to cover. Neo, Clover, App Harvest, Palantir, Open Door, Disney, Wish, SoFi, just to name a few. So if any of these companies are of interest to you, make sure you subscribe and stay tuned. This is Vinny from the Investment Club, and I'll see you next time.